In a new era marked by economic uncertainty, rising inflation, and technological transformation, investors are rethinking what it means to build a resilient portfolio. Traditional assets like gold are making a comeback, with central banks around the world buying bullion at record levels. At the same time, digital assets, once seen as risky outsiders, are gaining legitimacy thanks to growing institutional adoption, regulatory developments, and innovations like crypto ETFs and tokenized securities. I'm now joined by Brendan Caldwell, director at Caldwell Securities Limited, to unpack this further. Brendan, thank you so much for the time today.
Thank you, Theresa. Yeah, it's a very interesting world with the oldest store of value seeing a comeback along with the new up and comer.
Well, with central banks buying record amounts of gold, is bullion regaining its shine as a hedge?
Well, I do think so. It should have caught on earlier because central banks, yeah, they've been buying gold of late, but gold is very much the flip side of the U.S. dollar. And through all of the turmoil of particularly the last half decade or so, where governments have been all over the world printing money like they've never done before. I mean, take Canada as a for example. We doubled the size of the national debt in just a few years. So all the money we've ever borrowed since Confederation, that amount doubled within a matter of several hundred days. Like it was quite remarkable. So that so-called fiat or government-issued currencies, fiat currencies, have held their value at all has been surprising, particularly relative to gold bullion. But what's happened in the last little while is there's been a bit of a shift. So the U.S. dollar had been the world's reserve currency because it's a lot cheaper and easier to carry around U.S. dollars or to wire U.S. dollars. Physical gold is heavy. It's very, very heavy. So as a relative safe, quote unquote, store of value, the US dollar had been a better bet. And then comes along crypto, which not only seemed to be a store of value, but one that has kept going up from a few $100s back 10, 15 years ago per coin, per crypto, per Bitcoin to $112,000 US per coin now. It's not only been a store of value, it's been a great creator of value. So I think that the other thing that's happened, though, just in the last few months, is that with the Trump tariff war on the world, the U.S. is being seen less as a safe haven, less as a place to have one store of value, and just a general dislike. If Canadians here are not buying U.S. booze, there's little emotional inducement to buy U.S. bonds.
And given the resurgence of institutional interest and the rise of crypto millionaires, is Bitcoin still too volatile, or is it finally demonstrating its place in contemporary diversified portfolios?
Well, I think that crypto is here to stay. How it's going to be used when it's here to stay is another matter. So it has been initially from a speculative investment to one that has the aura of a value agreed upon. I mean, gold is only worth what gold is worth because everybody's agreed that the yellow metal is worth something. It's not really good for very much. It's too soft. It's it's good for certain applications, but it has no real industrial use other than the fact we've all agreed for the last X thousands of years that it is a store of value. Generally speaking, things that have been around a long time will continue to be around a long time. Things that are new still are yet to be proven, but Bitcoin has now been here for a bit. So whether it is Bitcoin, Ethereum, or some other cryptocurrency, I think that, or some variation on that, like a stable coin, I think they were becoming more integrated into the economy. So it'll be interesting to see, because gold, I mean, very few things are bought and sold for actual gold nowadays. It's a store of value. Where I think the cryptocurrencies could maybe even surpass fiat currencies, surpass government-issued currencies, is if they become part of mainstream commerce, where they've still been very much, shall we say nicely, at the periphery.
Well, Canadians have access to crypto ETFs. Would you say this is a good way to diversify our portfolios?
I think there's really two ways to attack it. Do attack crypto. I mean, three ways really. For the aficionado who would like to do it himself or herself, in as much as you can go buy physical gold, and there have been advocates of just buying physical gold and keeping it in your basement. They've been around at least since the 90s in advance of Y2K. You can go buy physical gold and put it in your basement. I know it's not quite what you're asking, but it'll come to make sense in sort of a Bitcoin explanation. But that's a lot of hassle. The proponents say that to the extent that you own any sort of receipt or fund or exchange traded fund or ETF that owns gold, what your asset is somebody else's liability, so that your ownership of the gold is intermediated by the system which you're trying to get out of. So too with Bitcoin, a way of owning Bitcoin is to own the physical Bitcoins, which are still, I mean, while it's been made easier and simpler, still has risks attached to it and is more complicated than perhaps most people are willing to do. So if you thought Bitcoin was a good investment, if you thought crypto was a good investment, there are, I think, three ways to attack it. To do it yourself, which is the technological equivalent of owning gold and sticking it in your basement. Or you can buy a fund or an ETF that owns, like Evolve Funds, of which our firm has a participation, offers crypto funds both for Ethereum and Bitcoin in Canadian and US dollars, respectively. So that's a way of doing it, with a plug for my friend Raj Lala's firm. But I think the third way, and this is how we've attacked it in large measure, is to own the picks and shovels that are around building out the new financial infrastructure. So, for example, we have an investment in a company called Tetra Trust, which just today launched or announced that it is creating the first Canadian dollar stablecoin that will be produced by hopefully by a recognized financial institution, a registered financial institution. So the companies that are making the new economy happen, like Tetra Trust, and in the US, a number of other big companies that are adopting stable coins and or some sort of other Bitcoin or cryptocurrency, are also good ways of participating in that. So owning it directly, owning a fund, or owning the companies that help to make this new economy happen are three ways I think investors can attack it.
And will digital currencies issued by central banks reshape investment strategies?
I think it more likely to reshape how exchange is done. See, the thing about both the stable coins, which is or a version of what the central bank deposit, I can't remember the exact acronym, but central banks are looking to do to bring some order and to try and retain control of the business of issuing currency. Mark Carney, who has been probably unique in the world as being the head of two major economy central banks and now a head of government, I think that's the first, has very strong opinions on the centrality of central banks' role in the issuing of stablecoins, which are cryptocurrencies that are actually attached to some sort of underlying asset that has value. They can be stablecoins attached to gold or stablecoins attached to a fiat currency like the Canadian dollar, like the loonie. I think that Mark Carney would like to, if not issue those stablecoins from the central bank, I think he would be better advised to oversee the process with already recognized financial institutions like Tetra Trusts. I think it'll allow Canada to respond more quickly to what's already going on in the world. The US has already pushed forward in creating a US stablecoin. I think they had their Genius Act, which pushes that forward. I think to keep up, I think Canada needs to go with the existing private sector infrastructure, and the Bank of Canada can fulfill a useful role in providing some oversight and regulation. But I don't think the central banks are going to be working at the speed to be able to do it themselves.
And as Canada offers growing access to crypto ETFs, will US markets soon follow, or is regulatory risk still too high?
Well, I think the US has, see, Canada is actually the first, we were the first country to do ETFs full stop. Like nobody had ETFs until we created them. And we were also the first country to create exchange listed crypto ETFs, at least as far as I know. We were way ahead of the US. The US is catching up, but I think if Canada delays too long because of the oligopoly that are our big five banks, I think that we could risk falling behind this new financial world that is inevitably being created globally.
Well, Brendan, thank you so much for the time today.
Thank you, Theresa.